Corruption?
Tolerating bribery is unfair to Hong Kong. No way.
No way.
Be smart. Report corruption.
I can see, I can.
On July 29th, the Red Devils cometh.
Good evening. The mainland's economic growth last quarter eased for a second straight period, hurt by weak trade and efforts to cool a credit boom. Gross domestic product expanded 7.5% over a year earlier in the 3 months ending in June, in line with market estimates and on par with the government's yearly target. The figure was down from the first quarter's 7.7%, marking the fifth consecutive quarter the economy grew below 8%. Despite running the risk of missing its annual growth target, National Bureau of Statistics spokesman Sheng Lai-yun said Beijing is determined to stick to its plans aimed at nurturing slower and more sustainable growth. Sheng admitted short-term growth will be hurt by property tightening measures, rules to curb misuse of public funds, and the exit of previous stimulus policies, but said they will benefit the economy in the long run. And despite speculation the central government would use targeted measures to stimulate growth, some analysts say Beijing is better off keeping its policies tight for now.
We still think it's best to keep the broad policy measures on the tight side. The biggest danger we see for China is just because growth is starting to ease off, they suddenly relax all the monetary tightening measures, and we start to see debt building up again, the property market taking off again. And that is very dangerous, we think, because already the financial cycle is looking pretty excessive. And that can lead to a very severe recession if you have a crisis there.
Moving on to other economic data released alongside GDP, annual industrial output grew less than expected last month. June's figure of 8.9% came in below forecasts for a 9.1% increase and May's 9.2%. Retail sales last month rose 13.3% from a year ago, beating estimates of a 12.9% gain. Fixed asset investment grew 20.1% in the first half of the year from the same period in 2012, missing estimates of a 20.2% growth. Local stocks paired early gains, but still closed near a one-month high as investors waited for further signs of economic stimulus from Beijing. The Hang Seng Index closed 26 points or 0.1% higher at 21,303. Turnover slipped to just under $46 billion.
Investors are still trying to figure out when the Chinese government will roll out policies in order to stabilize the economy. However, the general consensus is that the China government will provide a safety net once the GDP figure dips below 7.5%. I think the Hang Seng Index will be range-bound in short term in between 2,600 to 21,800.
Index heavyweight HSBC gained 0.5% to $85.10 after announcing plans to sell its subsidiary private bank in Luxembourg and a fund management company for an undisclosed amount. Solar power stocks gained across the board after Beijing vowed to quadruple the country's solar generating capacity by 2015. Among the most actively traded, Tencent surged $11.60, China Mobile added 10 cents, AIA dipped 50 cents. Cathay Pacific and Dragonair said passenger numbers rose in June, driven by an increase in students returning from overseas and summer holiday travelers. The two airlines carried a total of 2.48 million passengers last month, up 2.9% year-on-year, but cargo and mail tonnage fell 4.3% to just above 122,000 tons. In the night trading session of Hang Seng Index futures, July contracts are down 8 points with turnover at 582 lots. Shanghai A put on 1%, Shenzhen A surged 2.3%. Turning to the US, earnings reports will be in focus this week, as well as the central bank's semi-annual testimony to Congress on its monetary policies, Chi Ching Lee reports.
U.S. stocks capped off a record-breaking week last Friday, supported by strong earnings from major banks JP Morgan Chase and Wells Fargo. The Dow rose 2.2%, the S&P 500 surged 3%, and the Nasdaq added 3.5%. Stocks have recovered strongly after Federal Reserve Chairman Ben Bernanke rattled global markets last month by saying the Fed is likely